Today, an ex-Coinbase employee pleads guilty in the first ever crypto insider trading case. This year's Super Bowl will be quite different from last year's Crypto Bowl. We explain why. And Bitcoin's 2023 rally seems to be losing steam. We ask Bitcoin Foundation co-founder Charlie Shrem for his outlook on crypto markets. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Digital currency is turning lower this morning as Fed officials say the central bank has more work to do in order to fight inflation. By noon Eastern, Bitcoin dropped slightly, trading just below the $23,000 level, and Ether traded at around $1,600. At the same time, though, Polygon is on the rise, jumping 0.2%. Okay, let's talk about the day's top stories. Digital currency group started to sell shares in several of its crypto funds at a big discount. That's according to the Financial Times, which reported that the crypto conglomerate is trying to raise capital to pay back creditors after the lending units of its crypto broker, Genesis, filed for bankruptcy last month. Citing securities filings, the Financial Times reported that DCG started to offload its holdings in several investment vehicles run by its subsidiary, Grayscale. Now, we reached out to DCG this morning, but did not immediately hear back. The U.S. group has reportedly been trying to repay more than $3 billion to creditors, and as you know, it's been in a public dispute with Gemini over the debts. Yesterday, Genesis reached an agreement with its creditors, including Gemini, after months of negotiations. As part of the agreement, DCG would exchange its existing $1.1 billion note due in 9 years for convertible preferred stock to be issued by DCG. Gemini has agreed to contribute up to $100 million in additional funds to earn users as part of the agreement. Cameron Winklevoss, Gemini's co-founder, tweeted last night that the plan is a, quote, critical step forward toward a substantial recovery of assets for all Genesis creditors. Next, an ex-Coinbase employee just pleaded guilty in the first ever crypto insider trading case. According to the DOJ, Ishan Wahi, a former product manager at the crypto exchange, admitted to tipping others about planned token listings so that they could buy in and make a profit. Wahi pleaded guilty to 2 counts of conspiracy to commit wire fraud in connection with the scheme. Wahi faces up to 20 years in prison. The case is just one of the ways that U.S. officials are ramping up enforcement action in the crypto space. Last up, the Kansas City Chiefs and the Philadelphia Eagles go head-to-head at Super Bowl 57 this Sunday. And one thing you won't be seeing this year, crypto ads. That's quite the difference from last year's Super Bowl, dubbed the Crypto Bowl, where 4 crypto companies, including FTX, ran flashy commercials. The strategy was part of a larger effort by crypto firms to go mainstream by booking spots in one of the most watched events of the year. But of course, FTX filed for bankruptcy in November, and the crypto exchange's founder, Sam Bankman-Fried, was charged with defrauding investors. Fox announced yesterday that in-game ads for the Super Bowl have all been sold, and there's 0 representation in the crypto category. The executive VP of ad sales for Fox Sports said 2 crypto advertisers had commercials, quote, booked and done, and 2 others were close to finishing the process, but following the FTX collapse, those deals weren't completed. All right, on to our main story. Last month was Bitcoin's best since 2021, but the 2023 crypto rally seems to have stalled so far this month. Is the market ready for a rocket ship rally or preparing to turn lower? Crypto World's Jordan Smith spoke with Charlie Shrem, one of the founders of the Bitcoin Foundation, to find out.
All right, Charlie, I want to start with Bitcoin's price. I mean, we've seen a lot of debate with people we've spoken to at CNBC about whether this rally can be sustained, and you've been immersed in the world of Bitcoin for a really long time. So what do you make of this rally so far this year? And based on your experience, do you think it's the start of something bigger, or it's still time to be cautious?
We're definitely like in a plateau accumulation moment, but the sellers have been exhausted now for a while. It's been over a year. We've been in this bear market. The sellers have sold, and we're seeing like a lot of resolutions between the Genesis and Gemini situation. Just this morning, we're seeing a lot of resolutions between Binance purchasing Voyager. We're seeing resolutions potentially in the FTX, bankruptcy. So a lot of people are looking forward to getting their crypto back. They're Googling what's Bitcoin doing right now, what's crypto doing, and they're getting excited. Maybe the macro environment is showing signs of thawing, and that's definitely helping a lot of people.
Is there still bad news that people should be looking out for, or do you think we're in a situation where that's starting to calm down and people can get back to investing?
There's absolutely still going to be bad news. There's a lot of mistrust in the industry, and that's going to take years, I think, for people to trust us again and start to take us seriously as like a long-term investment in their, retirement portfolios and things like that. But I feel like it's showing signs of thawing eventually. A lot of people are taking it a little bit more seriously, and they're researching what's been going on. But what I did notice is that now we're in a situation where the bad news is not really causing the prices to go down anymore. Rather, in a little bit of good news is causing all of these like relief rallies or whatever you want to call them. Are we in a full-on bull market? I wish I could say we were. Is it now time to like follow up on the companies that we looked at a year or two ago and the projects that are still around? 100%.
So mentioning that you've been in the space for a while, I think we've seen a growing interest in government agencies trying to regulate the space, trying to bring some sort of control to the wild west of crypto. Is that a headwind for Bitcoin?
It needs to be like a perfect regulatory situation. A lot of the regulations that could have been there would have solved maybe a lot of the dodgy bookkeeping that happened with FTX. Maybe regulations could have said, hey, if you're holding customer deposits, holding these thing called stable coins, maybe you can't rehypothecate that money and relend it out as a hedge fund. There needs to be like a Chinese wall, if you will. But at the same time, our companies, it feels like, are always trying to be on the edge and in the gray area. And we have to like remember that if we're building out all these new protocols and technologies, especially when it comes to people's money, we need to be very careful and remind them that, hey, this is very experimental, this is very new. But at the same time, we can't just, and I fell victim to it myself. We were trusting, but we weren't verifying. It was exciting depositing money and getting automatic 8% yield. You still can't get 8% yield anywhere. We trusted that. Something went wrong where we stopped verifying, but we trusted what people said. And now we're seeing the consequences of that. And we still will continue to see that. But I think people finally see that, wait a minute, it wasn't crypto that broke. It was the trust in individual people within some of these crypto projects that broke.
Can you talk about the lessons that you learned or that you came upon in the last year, in the year that we just had, given the major bankruptcies, the major losses for so many investors? What was your takeaway from it?
My takeaway from it is I'm going back to like self-custodializing all of my Bitcoin and crypto. I got excited and put some money myself in one of these centralized custodians to get some yield. A lot of Bitcoiners and crypto folks trusted a lot of these places because they thought that it was being utilized, DeFi was being utilized in that they could retire off of this money. Keep $1 million in a DeFi protocol and you're earning, 8%. That's something you can live off that for the rest of your life. So a lot of people kept their money there, not just people in the crypto world, but outside. I fell victim to that too. But it shook me up because I really pride myself on being someone who could be counted on to say, Charlie, is this project, are they actually doing what they say they can do? What's the technology that they're vouching for? What's really going on here? They asked me to break things up and to find what's, under the hood. And I didn't see a lot of this stuff coming. And it made me personally do I want to take a step back from Bitcoin or crypto? But I could never. It's my life. It's my legacy.
If you're looking out at this year, what should investors be paying attention to in terms of projects or technologies or trends that you're also paying attention to for Bitcoin or other crypto in 2023?
I'm paying attention to a lot of the pick and shovel plays where as everyone, it's the old investment thesis that if everyone's going to pan for gold, then you want to be the one selling them the shovels because it doesn't matter if they find the gold or not. But I feel like this last year wasn't our .com moment. It was more of like our 2008 housing crisis moment. And so the companies that were built after that, especially in the mortgage industry and the housing, anyone who built a company post 2008, that's like a real company out there, has weathered this storm in the last 3 years, not crypto companies, but like traditional industry that was built in the last 10 years. So I'm looking for those. Now that the dust has settled, hopefully, knock on wood. What are the companies and businesses that are going to be in security, be in the DAO movement, be in real DeFi, but also moving real world assets on chain, mortgages on chain, car titles on chain, being able to borrow against those assets, I think is really cool. I think there's going to be a lot of things like that, but we need regulations to come out. We need good regulation to come out to basically tell us, because I think I saw a statistic that said 65% of projects that have raised money in the last year haven't actually launched their token yet because they're scared. And they have good projects. There's really cool stuff being built, but they just don't. I mean, I wouldn't launch a token in any environment, but it's really scary launching a token in this environment right now.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.